Yo, what's going on, guys? How you guys doing? What's up, Ginger, Phil, Raji, Andrew, Papa, Phil again, Rav, Emilio, Deval, Gervais, Ricky? What's going on, boys? Let's go right into it. Obviously, a big bounce today after a weekday on Friday. The world was ending on Friday. So, like I said in the chat earlier, if you guys were here last week, they kind of, in my opinion, this is all just my opinion. I might be wrong. Last week, I looked into the options orders, and there was barely anyone with puts. No one was hedging. Everyone was just full in for a bull market. After this Thursday or after Wednesday huge rip, everyone went for Thanksgiving. Everyone thinks all the big money managers are gone for the week, and no one was hedging. No one had puts. And Friday, they just created a headline to destroy all those people. So Friday, huge gap down, big weakness in the market. Obviously, we got oversold on a bunch of time frames there. If you look at the let's see, a 4 hour got oversold. When you see 4 hour a SPY oversold, I'll show you right here. You go back in time. 4 hour oversold here, huge bounce. 4 hour oversold here, huge bounce. Oversold here, huge bounce. Oversold here, huge bounce. So it's just patterns, guys. 4 hour got oversold. We're due for a huge bounce. Now, do we go up or down from here? Nobody knows. Today the action was bullish in my opinion. Why do I say that? First of all, we got through Friday's high quite easily. We got through the 21-day moving average very easily today as well. So 21-day moving average is at 463.75. We closed today at 464.62. So we did close above that. 8-day moving average is up at 465.80. So 465.80 is the next hurdle to get over. As you guys see, I have a yellow line here. At the beginning of the day, it was at 466. So let's see if we get over 466 is my next level, 466, and then straight to 469. And to the downside, if we do break today's low, it's going to be a problem. If we break today's low, that means the market wants lower. That means most likely Friday's lows will get taken out. So right now, just because of one bullish day, I don't turn bullish. I'm still not bullish. I'm still not bearish. It's kind of just up in the air. I played what was in front of me today, like QCOM looks strong, a couple others, AXP looks strong. So we're just putting the probabilities in our favor, basically. We're still in an uptrend overall. The daily is consolidating, obviously, all the way from November 5th, even though we got good moves in there. But look at the weekly. This is still a bull market. This is just straight up in a line, just grinding higher. A little pullback there in September, and then the next leg higher, right? So now we're just consolidating that move. Do we come and test this 21-day moving average on the weekly, which is at 447? That's what we did in September. So that is a possibility. Just keep that in mind. Headline risk all over the place, especially with the new variant. What if they say the variant starts killing people? Then, you know, the market's going to dump. You guys seen just because they introduced the variant, they didn't even know anything about it, and the market dumped like that on Friday. So just be aware. Know that one piece of news can make all your short-term options go to zero. So that's why I'm taking a little bit more time on all my options, if you guys notice, except for a couple lottos here and there like Tilray. We have the Safe Banking Act today. Seen some flow, followed the flow, very small. Let's see what happens. If it hits, it hits. If it doesn't, I'm not worried about it. QQQ, same thing. We're right back into that little channel that we were talking about. Remember, we drew this out on SPY as well. Let's see. Yeah, QQQ. So we had a high. We pulled back. We touched the low. Went right back to the high. Touched the high. Pulled back. Touched the bottom. Broke the bottom on Friday. But then we're right back into it here. So as long as we're holding inside this channel, QQQ can continue to go up. We did break Friday's high. We broke Wednesday's high. And we closed above last Tuesday's high. So QQQ looks the strongest by far, as you guys could have seen intraday here. Just straight ripper up, closed almost near the high of the day. SPY did have some resistance up here. That's why I believe we pulled back at the end of the day there. You guys see that yellow line that I have drawn at 466 there. We got down to the first support. It held it, kind of just consolidated around it. And pre-market low was right underneath it as well. If you drew this pre-market support like I told you guys to. It's just kind of the supply zone here, or the demand zone here. So everyone started buying down here. Came up to the top. Everyone started selling. It was very tough to get through. Obviously, a lot of people selling up there. And then at the end of the day, it failed to get through and it dumped at the end. But we did hold VWAP into the close, which is bullish. Let's see what happens tomorrow. XLF weakest out of all of the sectors, I believe. Out of all the indexes, sorry. Why do I say that? We're just range bound. We broke the range to the bottom, came right back up, closed within it one day. Friday dumped right below it, and now we're coming back on top, and we're closing below the 50-day moving average on XLF, which is not happening on any other time frame. QQQ 50 days way down here at around 379-ish. SPY 50 days way down here around 451-ish. XLF is still underneath the 50 days. So financials are weak. They are due for a bounce, which is why I took the AXP and V and MasterCard plays today. IWM here also weak. It's also under the 200. It's also under the 50-day, and it closed under the 200-day today. 200-day on 223.83. So on IWM is actually the weakest. We closed below the 200-day. XLF 200-day is way down here. IWM 200-day is right here. So keep an eye on IWM. We did close under the 200-day, which is at 223.83, and that is obviously the 200-day is very close on IWM. Why do I say that? Because of this huge range that we built. So it let all the moving averages catch up. If we do turn bullish, IWM should rip the most as usual. And I don't change that stance just because they're the weakest right now, is because all the moving averages are so close together. Here we have 223.83 for the 200-day, and we have 228 for the 50-day. Look at the difference between this one. The 200-day is at 426 on SPY and 451. So huge, big difference there, and it's the same on QQQ, same on XLF. IWM has just been sideways for a year, so all the moving averages are catching up to each other. Once they start getting very, very tight, then it's going to coil for a big move, either up or down. Let's see what happens. Right now, though, IWM is a no-touch zone for me. We're right back into the range. This is called a false breakout. If we broke out, came back and retested this and ripped, then it would have been a good setup, but we did not. This is what I wanted to see from IWM. You see this? This was the high. Me, Ricky, and T, actually, this is a funny story. We were in Toronto watching the CRM earnings after hours. It would just keep going up, keep going up, keep going up. And then it put in a high at 284.50. So what happened? It took CRM almost more than a full year to get back up to 284.50. We rejected from it the first time, and then finally broke through, ripped for a bit, came back down, retested. And this is what a successful retest looks like, guys. You see how we pulled back? 1 day, 2 day, rejecting at the previous breakout area, and then today 4.4% move. They have earnings on Wednesday, so that's another catalyst for them. IWM simply did not do that, which is why I cut my position last week. Broke out after so long, came back down, retested, held for 1 day, held for 2 days, and then we dumped it on Friday. So that's the difference between a successful retest and a failed retest between CRM and IWM. VIX, again, I know a lot of people say don't chart it, don't chart it. It's been helping me chart, and I've been calling it every single day. It's just putting in higher lows. So a higher low, put in a low here. After the last spike, it put in a low. Now higher low, and now a higher low. And at the same time, higher high, higher high. And we went right back up to test that previous spike at 28.79. Friday, we tested 28.99. So basically a double top on VIX there. Big dump off today. Same thing as last time. Last time we had a big dump off for 4 days straight after. Let's see if we get the same type of move. VIX still has to go down to $21 to fill the gap. So we were off by 70 cents today, but we did close around 23. So VIX has another $2 to fall to fill that gap. And then let's see if it's just putting in a low. If it puts in a low higher, than this, $16, if VIX comes down and stays above $16, there's a chance for more downside in the market. That means VIX goes up, market goes down. This has been here forever. You guys have seen me draw this VIX over 1763. Market drops a long time ago. 1763 was my resistance. Back here on November 10th, we spiked through it. What happened November 10th? Right here, marked the bottom. All right, and that's the only time we got above it and closed above it. Other times it just came back down. Second time we closed above it was right here on November 22nd. And you can just line it up. November 22nd, close near low of the day. We did go lower after that, but the VIX cooled off for a bit. Volatility subsided for a while. Just a bull flag and then a big pop on Friday. So the technicals showed you that some news was coming last Friday. Just because people are like under hedged, when people have too many calls, the market pulls it back. When people have too many puts, the market spikes, which is exactly what happened Friday. No one had puts. They wrecked all the call buyers. what happened today? Everyone jumped in puts on Friday thinking more downside, so they ripped the market and they screwed all the put buyers. So the market just wants to screw over as many people as possible. Remember that, and you will be a successful trader. SE here, A plus setup, 200-day on the daily, 200-day moving average. Weekly had 50-day moving average right there. And as you know, SE is one of the strongest stocks in the sector, so I went quite heavy on this. I sold half my position on Friday. Position's completely free, even though I have a lot of size in it still. I don't care because my position's completely free, and I do expect this one to keep going today. Today was not so good. Why do I say that? Because it was up. I mean, we did close higher than we did on Friday, and the problem is we rejected the 8-day moving average. So do we stall out here? Do we do the same thing as VIX, where we put in a low, then we put in a higher low, then we put in a higher low? That means this would be the high, and then we pull back, and then we put in another high, and then we pull back, and then we put in another high. That's what's needed to change the trend here. So that's what I'm always talking about. Like stocks, it's not going to go, SE is not going to go straight from 272 all the way to all-time highs. It's in a downtrend right now. It has to change the trend. Buyers have to show up, and it has to put in higher highs and higher lows to get back to all-time highs. Other than that, it still does look good. I'm still holding it. I am looking to roll out. If these 310s hit in the money before December 17th, I'll probably sell them and roll out to 330s for Jan. That's just my plan personally. Let's see what happens. Dawkin here, another one of the strongest stocks in the sector. I mean, another one of the strongest stocks in the market. We came down, pulled to hit the 50-day moving average, which we haven't done since August of this year. Last time we hit it in August, it just ripped to all-time highs straight in a line. So that's what we're looking for here. It held the 50-day beautifully, been higher lows, higher highs every day. And the next big hurdle we have on Dawkin is this 21-day and 8-day moving average right here, which are at 107.80-ish, you can say, because they're both almost exactly the same. So 107.80 will be a hard level to get by on Dawkin. So I might take the we have 105 calls. They're already in the money. I mean, you're up like 70-80% already on them. And I will look to roll these ones out as well because I love these stocks. If the market does rally into Christmas, these ones will run very, very hard. QCOM, one of my favorites today. I called it out right in the morning. The reason I called it out was this little bull flag that I was seeing here. You can draw it like this. You can draw it in other ways. Another thing I like is I watched this video over the weekend on the semiconductor chip shortage when the .com crash happened. And one of the strongest companies during that whole time was QCOM. Let's see if we can find it here. I haven't looked it up yet on the chart, but yeah, it's gonna take a long time. But so what that basically means is in 2000 when all the internet stocks were crashing, Qualcomm held its own. Qualcomm actually went up a lot during that time. So Qualcomm, very solid company. Their last earnings were absolutely amazing. They said their supply issues with chips are cooling off, but the demand is all still there. So that means they're getting more chips and they're selling more chips still. And look at the gap up. We went from 138 at the high. After earnings, we went to 159. So a $20 move on a huge company like Qualcomm. That means something's happening. It's power earnings gap. Went up, consolidated, another rip. Went up, consolidated. Do we get another rip to all-time highs? Which would be at 188.77. So 188.77 is the level to watch. I think we can get straight to 200 if the pattern stays like it did last time, which was consolidation for 4 days and then rip. Consolidation for 5 days. Do we rip now? Let's see what happens. Qualcomm, but looks very good, and I do expect continuation on this one. DAL, so this one took a hit on Friday. I called this one out because I seen a lot of flow. I seen the weekly chart setting up. I seen the daily chart setting up. It kind of looks like a flag, but I would just call this a support. Like every time it was getting down to the demand zone, people were buying, it would go up. Demand zone, people were buying, it would go up. Demand zone, go up. So we were right back there, and Friday we got that news, so a gap down. Today, obviously, higher than Friday, which is good, but we didn't close higher than Friday's high, which I want to see. So the main thing I want to see on DAL now is a close above Friday's high, which would be around 37.18. We need to see over 37 on DAL again. We have January calls. I didn't add on it because there's so much headline risk with the new variant and whatever, but I am still watching this very closely. I'm holding my original position. We have a lot of time on these calls. I will add if I see fit, but for right now, I'm just holding what I got. DKNG just holding the support here at 35 from a while back. It does look like a head and shoulders, especially on the weekly. It looks like it wants much lower. If you guys look at this, shoulder, head, shoulder, and it's right at the neckline here kind of thing. And if it doesn't hold this one, we could see a lot more downside. And right now, it's just kind of consolidating here. So do buyers step in and send this one back up, or do we break the neckline below 34.90? If we close below 34.90, this one's done for a long time, in my opinion. It's very similar to the Melly chart here. We kind of had a head and shoulders here as well. It did not hold the neckline here. Where is my delete button? There it is. All right, so it did not hold the neckline here, and look how much we dumped down here. We just keep going lower and lower, newer and newer lows. This is the demand area for Melly, 1260 to 1195. So if they don't show up between this area here, if they don't show up between these two ranges here, this one can break 1190, and then the next level down is all the way under $1,000. So if we break through to 1195, I think this one goes to $1,000. Other than that, I mean, it's worth taking a risk here. Why do I say it's worth taking a risk here? Not with options, but like maybe further out options or equity, because when they usually come and test this, you guys can see, they usually just like consolidate here. Sometimes, I mean, very few times when it matches up with a strong market, it touches the support and just rips up. Sometimes they just kind of consolidate here to kill everyone's calls, and then they rip it afterwards. So Melly, let's see where this one goes. I mean, it needs to hold 1195. That's a line in the sand. If it goes under there, it's broken completely. Moderna, another gap up. 2 huge gap up days. It's hard to buy. Duval, it was like a YouTube ad, man. There was like this big guy having an interview on YouTube. It was an ad during one of my financial videos that I was watching. It was a 40-minute ad, and I watched the whole ad. It was all about semiconductor shortages and how he's saying the market's going to crash if we don't fix these shortages. And he was talking about which companies thrived during the last chip shortage. And he was talking all about Qualcomm. And yeah, I just really liked it. I looked into it a little bit, and I really like Qualcomm chart. I looked at the chart. Even though the market was red, everything was red, it was closing lower. Every day it would close green, meaning the buyers would show up at the end of the day and save the candle. So that's one of the reasons I jumped in. And Qualcomm, obviously the earnings were amazing. Semiconductors are in play, as you guys, I'll show you at the end here. And I'll go over the semiconductors. The whole sector is really strong right now. If they fix the supply issue, semiconductors are going to take off. You need semiconductors in every single thing, in cars and TVs, computers, fridges, stoves, phones. Every single electronical piece that you can think of has semiconductors in it. Especially the electric vehicles, they take, I think, thousands of semiconductors per car. And if you don't even have one of them, you can't make the whole car. So Moderna, 2 straight gap ups, huge days. Obviously, people are talking about more and more vaccines because of the stupid variant that's coming out right now. Very hard to buy up here. I would wait for consolidation. Personally, it's just way too extended for me. Obviously, this one's a runner. When it does run, it runs a lot. As you guys know, it was at 266 on Wednesday, gapped up almost 77 points on Friday at the highs, and then another. So we went straight from 266 all the way to 376. 110-point move in 2 days on Moderna, so it's very hard for me to buy up here. I'd wait for it to consolidate a little bit, and then we can see our entry if we get back here. If we get maybe a retest of this breakout here. Let's see if we can draw a little retest of 352. As long as it holds 352, which was also 350 is today's low. So if it holds today's low and 352 for a little while, then I might consider Moderna, but it's just way too extended for me here. But yeah, other than that, vaccines are hot. Everyone wants a vaccine. That's their whole agenda, I guess, to get more people vaccinated, or everyone that's unvaxxed needs to be vaccinated. They're even making it federal law soon. In some European countries, they're making it needed. So just wait for Moderna. Let's see if we get a little pullback or consolidation here, and then we'll see if we can get any entries here. MQ, I took equity in this one today just based on the risk to reward. Obviously, this company is very good. They are a part of Square, actually. They're partners with Square, not a part of them. So if they're partners with Square and they're the big crypto, they accept crypto payments. It's called Marqeta. It's a very strong company. There was a lockup period around here. So everyone that had shares from like way before IPO, which would be really, really cheap shares, they were only allowed to sell right here after their earnings. So that's why the stock price drove down, in my opinion. Last time you see this, we came down, we tested this 1978 level. Everyone bought this stock at 20 bucks. Went up, straight up, ripped through resistances. And I'm looking for the same type of play here. So the same type of dump here. I'm just watching this one. And another reason is not only that they're a strong company, is there's a very clear support on this one. So it's very clear that 1978 was a low. We retested 20 bucks almost 4 times. 3 times 1, 1990, 1978, 1995, and 1993. So around 20 bucks is where everyone starts buying. And I always buy with other people. Like, lots of people are scared of this chart right now. If you buy it here for 20 bucks, you have basically 40 cents of risk. If it breaks underneath 1978, and your stop gets hit, you lose 40 cents a share. But the upside on this, you can get all the way to 27 bucks. So risking 40 cents for a $7 gain is always a good trade, in my opinion. Whether it goes right, whether it goes wrong. If you do 10 of these trades and even 3 of them go wrong and you're wrong on 7, you'll still make money. So those are the types of risk rewards plays that I'm looking for. TDC, we got April calls. Very clear support here as well at 43. Looks like we went down, scared out all the bulls from this gap down. And now let's see if we can start moving back up. I mean, it held support. First level to break is the 8-day moving average here at 45.58. And then we got the 21-day and the 200-day kind of matching up. So let's see if TDC can reverse off this support. If we break this support, there's a lot further down, and I will probably cut my calls. But this is the support underneath there. It'd be around 38 bucks, so I'm not holding my calls all the way to 38 bucks. So if we do break this support, I'll be out quick. Other than that, let's see if we can curl back up and start moving up. Let's see if this one looked the same after earnings. So Etsy, big gap down on earnings, a little pop, and then they faded it, but they held that low. Okay, so Etsy was a little bit different than that one. Other than that, let's see what TDC does. The financials are pretty good on this company. Twilio, finally a green day after Friday. Friday was green too, actually. When the market's weak and a couple stocks are green, that's relative strength. It looks great. Let's see if we can start moving farther up here. It's the same kind of move. Big dump on earnings. Just flew back, and then it took out the lows after. Let's see if we can bounce right back. Again, we're not going to bounce all the way down from 266 all the way back to fill this gap to 340, right? We're going to have to put in a higher low, higher high, higher low, higher high. So we're just waiting for the trend change here. AXP was the one I jumped in today. Why did I jump in it? Just this little pattern. The reason I took AXP is because their earnings last time were solid. Financials are really beat up right now. Looks like a pretty solid support. We've been bouncing off this support every time. And MA, Visa look the same. It could have been your pick. Whichever one you wanted to take, you could have taken it. MA, same kind of broadening wedge forming here. Visa, these companies aren't going anywhere. People aren't going to stop using credit cards. People aren't going to stop paying interest. So solid fundamental companies, solid charts kind of thing setting up. Let's see. A very tight risk entries again. If it closes below today's high of 154.34, we get out quick, in, out. Low risk, high reward. If we get the move that we're looking for, we can go all the way up to like 190. Like, look how big this wedge is here. If we bounce back up to the top, we can go 194, 195, like way up here. So we're talking $33, $34 gain and only a $3 loss. So those are the type of risk reward plays I like. So I jumped in that one. Let's do Amazon real quick. Amazon looked weird today, man. I didn't really like the price action today. At the end of the day, it's only an inside day after Friday, but Friday was so weak and we closed at low of the day. I expected more of a bounce on this one, especially after SPY. QQQ looks strong all day. I mean, this is not really that strong. What happened on Amazon? Nothing really to say about this one. It's just consolidating. Just put in a low, put in a high, put in a higher low, put in a higher high. Now is it putting in a higher low here? Right? So now we're looking for, if this is the low, we should go up and break 3762, in my opinion. If it's not the low, we can continue to dump down further. And the thing with Amazon is it's tough to hold this one because the recent low, if this is a failed daily trend change, then we can go all the way back down and retest 3273, which is 300 points down. So just a lot of risk in Amazon here. That's why I'm not playing it too much. But if I do see the move, 3550, if we take out Friday's high, for example, 3663, then I would be looking for calls in Amazon. Obviously, they're going to be more expensive. I don't need to pick the bottom. I'd rather just wait for it. Ricky knows the stock better than anyone. He's taught me how to trade the stock better than anyone. So 3350 would be the first time I consider taking calls. Unless we get like a big oversold dump or oversold bounce or something, I won't be playing Amazon here. Unless we're over 3350, which is Friday's high. Wait, what was today's high actually? 3600 would even be better because today's was 3596 high, and Friday's intraday was 3600. So 3600 would be, I wouldn't even take a swing on Amazon. That's the only time I would play a swing on Amazon calls is 3600. Other than that, it's still in a daily uptrend. Let's see what happens. Let's see if it holds up here. LRCX absolute beast. Like I said, chips are in play right now. LRCX is all-time highs today. Big day, 6% day. I think they have investors conferences coming up this week. So LRCX, Ricky's in play. A lot of the semiconductors are ripping today. As you see, LRCX was up. There's no real play here. If you're in, congratulations, take some profits. If you're not in, you should wait for a retest of 666. So 666 was the previous resistance. If we come back down and test $666, then you can look for an entry on this one. Other than that, looks great. Congratulations if you're in. TSM also decent day, 2%. AMD was firing off. So AMD had some news that Tesla's using AMD chips in their cars. So that was the news that set that one off. Looks good. Nvidia also 6% day. So chips are just absolutely ripping. ASML huge day, 4% day. LRCX conferences are coming, and let's see how they react to them. Other than that, I'll do DLO 3760. No one's waiting until 3760, Ricky. If it closes above 3600, you can take a shot at it. 3760 is probably the more. 3775 is probably the safest bet on it. Let's go. What else we got? DLO here. Same type of play as MQ actually. I don't know this company. I never watched it. Never looked at it before. But there's a very clear support from the IPO, which is 2960. So if I was playing DLO, I would play it as close to this 2960 as possible, just because I would have a defined risk. If I'm closing under 2960, I can get out right away. If you buy it here for $35, you have a $6 risk, and for a $6 risk, you're gonna need like $18 to $24 reward. Do you think this stock moves up $24? If you do, then go ahead. You've probably done the research. But for me, if I was to play this name, not knowing anything about the company, I've never traded this company before, I would get in as close as I can to my risk level, and I would play it to the upside. That's exactly the play I played with MQ. And that's exactly the play I will play with SQ if we get this set up down here at 197, 192. Same play we played with SE, which we played it right off the 200-day on the daily and the 50-day on the weekly. And the exact same type of play that we played on Dawkins. Like, these are just the type of plays that you want to play. You want to find the strongest stocks in the stock market, and you want to play them as close to the support as possible if you can, because that way you have defined risk and you have a very clear exit point. And that's about it. Let's see if we get some continuation tomorrow. Don't get too excited, bullish or bearish. I'm still taking light positions. I told you guys we did nail a bunch of plays. We nailed Amazon puts today. We hit the QCOM calls, American Express calls. So just play it as the Dawkins up, SE's up. I mean, Ricky's killing LRCX over there. T killed CCL. So just keep playing small, keep playing light. Just do what the take what the market gives you. Don't force anything. And thank you guys for attending. I'll see you guys tomorrow.